at least this year. What does that mean for the banks and financial institutions? Well, Old Mutual has controlling stakes in Nedbank and Mutual and Federal. It offers services that spans insurance, investment, asset management. Dave MacCready recently took up the post of CEO at Old Mutual South Africa. That was at the beginning of May. He was introduced at an event today, and he joins us in studio now. Great to have you with us.
Lovely
Dave.
to be here. Thank you.
So was today's decision by the Reserve Bank the correct one?
Well, I think it is. It's a great relief, I think, to ordinary consumers. Obviously, we all are expecting an upward interest rate cycle from here, and I think the warnings are quite clear. You know, the impact in terms of high electricity, the impact in terms of higher wages, it's all going to play itself through into inflation. And at some stage, the governor is going to have to increase interest rates. It's interesting to see almost a split decision. 4 voting in favour of staying with an ordinary unchanged interest rate, but 2 voting for an additional 0.25%.
So your consumers, I don't know if banks should even have a responsibility to kind of warn, you know, those interest rate hikes are coming. So you have to be careful to live within your means.
Well, we certainly have been. I mean, right across the financial services industry, we realise that we've been living in almost a sublime environment. And I think, you know, as it was made in the insert, is that as soon as developed economies start increasing the interest rates, so that actually changes the whole flavour with regards to exposure to developing economies. And it obviously puts the rand further at risk.
What does it mean for banks? Because you can make more of interest income, but you also have consumers who now will feel the pinch even more because a lot more South Africans are indebted than saving. What tweaks? Do you do anything to gear up?
So it actually means 2 different things. One is that obviously banks actually benefit in the very short term in terms of the endowment, in terms of their capital, increased interest rates. But as time goes on and as the consumer becomes more embattled, so you start seeing the impact of that coming through in terms of bad debts. And I think banks have been really looking towards an interest rate cycle going up for some time. So I'm pretty sure that they're well prepared in that respect.
As I understand, South African banks make more of non-interest income, fees, than their international counterparts. So that basically means bank charges. Old Mutual has been interested in selling insurance products to bank customers. Should there be any fear here that banks, because maybe making less on mortgages and things like that, will target us, extract money where you can in fees in any form that you can?
I think targeting is perhaps an unfortunate word. I mean, I think we're all trying to meet our clients' needs and service clients from a holistic point of view. And certainly non-interest revenue is very important to banks. It's a balancing effect between the impact on and the margin they make on interest rates. It's not only fees and commissions, but it also includes obviously insurance income and all other related non-interest revenue. And it's quite an important balance for a bank in terms of actually moderating the volatility of its earnings.
I guess my question is, in this tough environment where it's tough for banks as well, can you still be on our side as consumers?
Well, I think that any financial institution which is not on the consumer side is not a sustainable institution. And very, very much so, one's got to put the customer right at the centre of the interests in terms of the customer and meeting the customer's needs through any interest rate cycle, and that's vitally important, particularly in an environment as we are now, with very, very low economic growth.
Your experience was crucial. You have experience in banking, asset management, in insurance. Can you look at any future trends? Where is the growth going to come from? Because some say that the very fundamental model of banking is under threat, with retailers offering similar sort of services. Do you see any huge paradigm shifts?
So I think there are a lot. I think that the traditional boundaries between traditional insurers, traditional banks, retailers and technology is blurring. And to be honest, clients are actually expecting to be dealt with from an omni-channel basis. In other words, to deal with an institution, whether it's an insurer like Old Mutual or a bank like Nedbank, in the way that they choose to deal with it. And, you know, we're all quite aware of the new growth in terms of the millennials, the new generation coming through, prefer using direct, prefer mobile and digital. And that's a fairly instant society that all financial institutions need to learn to deal with.
Do you think you're responding?
Well, we put in a lot of investment into innovation, and certainly it's a big focus around mobile and digital. I think it's important for us to stay relevant, and particularly to stay to be able to meet the needs of our clients. And as our clients move in terms of their choice of channel, banks and insurance companies have to respond.
There's also a focus, I understand, on the lower income segment. So you call it the mass foundation cluster, or the bottom of the pyramid we're talking about.
I don't know if cluster is a good word, but yes.
But I've heard bankers in the past say, yeah, we have to service those people sort of as goodwill. Then Capitec came along and showed that there's huge income to be made from people who don't have that much in the bank, but they've got an account. Has there been a change there?
Well, I'll talk purely from an Old Mutual perspective here in terms of from an insurance perspective. And the mass foundation segment is a vitally important segment. I mean, Old Mutual is without doubt, I think, the biggest player from a traditional perspective in the mass market. I think it's primarily because of our diversity as an organization that we understand how to meet the needs of those customers. We understand how to distribute into that environment. We understand effectively what their needs are. It's a very important segment for us, but it's a segment which, one has to be very conscious of how to meet the needs of clients from an integrated and sustainable perspective. And I think that you'll see that segment changing over time as financial institutions really try and meet the new demands of clients.
And is it cheaper to serve them because of the innovation that's happening?
Well, to a large extent, innovation, I don't think, has found its way in terms of mobile and digital into that segment. It's primarily more of a face-to-face interaction. We're talking to a large extent of customers who, to a large extent, are rural, who depend on a face-to-face sale and interaction. And I think that model will continue for some time. I think that what will change is in terms of actually looking at that segment in terms of individual products, looking at it more from an integrated value proposition, which I think is more sustainable for institutions going forward and actually more in line with the benefits of the client.
Okay, so looking at what the Reserve Bank Governor was saying today, bringing down the growth expectations, again, all the segments under pressure, banks under pressure. Old Mutual has a big push into the rest of Africa. How much will that compensate for low growth here? And I mean, your focus is on South Africa. I'm interested to know, do you feel you've got the sort of short end of the stick?
So not at all. So South Africa is a very important component of the wider Old Mutual Group. The majority of our earnings come from South Africa. We are a South African company. And by the way, Old Mutual turned 170 years old on Sunday, and our roots are very firmly entrenched in the South African and the broader South African communities. Without doubt, economic growth is slowing in South Africa, but certainly we don't see our opportunity slowing at all. And we released our quarterly results last week, and our South African sales are up at a gross level at 27%, which is enormously good growth in terms of sales quarter on quarter. And that's really across the majority of segments. So we're still seeing a lot of opportunity to grow here. Obviously, the concern is that what is good for South Africa and what is good for ordinary South Africans ultimately is good for ourselves as Old Mutual. And with a low growth rate from a South African perspective, a lot of investment and a lot of focus is actually being played into the rest of Africa, where growth rates are supposedly higher. And
will you support that African expansion? I guess a lot of learning has happened here.
So Old Mutual itself is trying to position itself as an African financial services champion, and that is really predicated and based on the foundation that we have here in South Africa. So South Africa is a very important part in terms of servicing any growth that we actually have into the rest of Africa, both from an IP point of view, from a product point of view, and from a technology and organizational support perspective. So very much it will have the South African support.
Does this mean anything for the London listing? I think recently there has been a little bit of resentment about companies that are trying to reorientate abroad. So you're saying despite that listing, there's still huge prospects here and a focus here.
Without doubt. I mean, you know, you don't have a 170-year-old heritage and legacy and walk away from it. I mean, South Africa is a very important part of Old Mutual. It will always be so. Obviously, the London listing has raised some sensitivities. My focus is purely on Old Mutual South Africa. So what I've got to do is keep our head down and make sure that we service customers here and that we grow from a South African perspective. Decisions around what happens to Old Mutual PLC and where our listings are based, well, that is really based up to boards and up to shareholders. And my job as an executive is to make sure that we maintain a sustainable business and we look after our clients, which are the most important part of that.
Fair enough. Thank you so much for your time this evening. That was the new CEO of Old Mutual South Africa, Dave MacCready. Well, at the end of an era, perhaps approaching, talking about history and heritage now, De Beers says it's seeking expressions of interest in its operations in Kimberley in the Northern Cape, and it hopes to conclude a sale in a matter of months. Now, the largest diamond producer in the world has been mining diamonds in Kimberley